Well, hello everyone. Welcome to Trading a Smaller Account. My name is Barbara Armstrong. I'm a coach with Schwab, and we have a jam-packed class lined up for you today. We're going to look at 4 of the trades that we have placed in previous classes, and then we're going to look at 4 or 5 new stocks. Well, they aren't newly launched stocks, but ones that aren't currently in our example portfolio, and look at example ways that we may or may not choose to trade those. We have been busy in the chat for the last 15 or 20 minutes. So if you get the chance to come and participate live in this class, and I invite you all to do so, know that you can hop into the chat 15 or 20 minutes ahead and we can solve some of the problems of the world before we even get started. So thank you all for participating. If you're here for the very first time, please feel free to type a greeting into the chat so that we can welcome you. And to all the usual suspects, it's great to see you on board. So to Riceberg and Rhonda and Will and Tatiana and Jeff and Jeremy and Backroad Bob and the rest of the gang, thanks for being here. We also have Connie Hill with us in the chat. She's a friend and fellow coach. She knows all the strategies we're going to talk about today inside and out. So if you've got questions, don't hesitate to ask between Connie and I. We'll do our best to answer your questions. If you aren't following us on X, I don't know what you're waiting for. Consider this your invitation. Barb Armstrong CS, Connie Hill CS. We're posting content there on a daily basis that we think you'll find helpful. Okay, so, and we've got some people here for the first time. So how cool is that? So welcome aboard. We meet every Monday and Friday at high noon to talk trading a smaller account. I also teach a class on Wednesdays called Trading Price Patterns, and I treat that as a companion class to this. So you want to add that to your weekly roster. And then I picked up getting started with technical analysis, and we're just finishing the design of a new rotation for that class, but we'll be talking about flag patterns and pennant patterns and candlesticks and all kinds of good stuff. We place trades, example trades each and every week in that class, so you'll want to join us for that as well. Is this a paid class? No, it's absolutely free to attend, which I think is pretty incredible, actually. So yeah. Come and join us. Absolutely no charge. It just requires time. And then if you want to do something with it, I always say, if you want your trading to pay you as if it's a business, you need to treat it like a business. Hobbies tend to cost money, right? Right. Okay, so just to go over our important information, know that options carry a high level of risk and aren't suitable for all investors. You have to meet certain requirements in order to trade options with Schwab, and not all will qualify. We use the Paper Money software application on the Thinkorswim desktop platform, and it is a brilliant place to learn and make sure that you understand what you're doing, both with respect to how to place a trade on the platform, and that you understand your trading strategy, have a plan in place, and know what you're going to do, whether the trade goes for you or against you. Someone asked a question about a short call vertical that we had placed on Nike. One of the differences between Paper Money and a live account is that short option positions will never be assigned early in Paper Money, but that can happen in a live account. And so it's nothing to be afraid of. You just need to understand that it can happen and what you might do if it does. For those that are new, we started with $25,000 at the beginning of the year. Our max position size, if we're buying stock, is 5,000. And you might say, that's crazy. That's 20% of the account size. But we wanted to be able to do strategies like a buy right covered call and some strategies like that. So that's why we made that decision. On Thursdays, I teach a class called After the Close, where we're looking at how you might invest or actively trade if you don't get to look at the markets when the market is open. And we have $1 million in that account, and our max position size is 5%. And our max trade risk isn't 2%, it's 1/3 of 1%. And so, this is an individual decision, right? And we're focusing on short to intermediate term time frame trades in this class, both bullishly and when the market is what I like to think of as misbehaving, which it did for an entire year and moved to the downside, then our focus is on taking advantage of that using bearish option strategies. So what we're going to do, and I jokingly said to someone on the team this morning, do you mind if I go an hour? Because I have a lot to cover. And the reason I get asked this in the surveys a lot, the reason we can't go an hour is that there are all these amazing people behind the scenes that make sure this class is what it needs to be. And, they're zooming in on things and all of that. And so and we need to give them time in between classes to do things like get a beverage or go to the bathroom on occasion. So we got to give those guys 15 minutes. I jokingly said that. And I thought the suggestion was, you know what, we cover what's going on in the markets in general, each and every class. And so do we really need to do that in this class? And so, here's the deal. Markets are up today. They're within a stone's throw of an all-time high on the S&P 500, on the NASDAQ. All the major indices are up. The VIX is down. I talk about this every single day. The top sectors, what do they look like? Communications, consumer discretionary, and financials are still absolutely crushing it. And how do I know that? You can come to this public watch list. I've customized it to say, who's been killing it in the last 3 months. And it's consumer discretionary, which is close to an all-time high. Communications hitting an all-time high today, this index. And financials hit an all-time intraday high yesterday. And so if you're just starting out and you're saying, like, if I want to run where it's hot, maybe these are areas that we might want to consider looking at. Okay. So that's our super quick overview. Somebody mentioned before the class started that they are going to be in Atlanta next week. Now, why might they have mentioned that? Well, because we are another free resource, not just these, live webcasts, which we do over 30 of each and every week. We've got Ben Watson talking option strategies today in Seattle. But next week we'll be in Atlanta with a 2-day workshop on Friday and Saturday. If you'd like to join us, it's not too late. I know that a few of you that are in this class today are going to be there with me in Atlanta. If you are, please come up and introduce yourself. Would love to meet you. Then we're doing that same workshop in Scottsdale in March. And then mid-March, we're going to be in Chicago doing an advanced option strategy workshop. So if you're comfortable being here, you would love to be in Chicago. I'll be in Chicago for that event as well. Get yourself registered because these things fill up fast. Okay. And you just come here. I'll put this link. I'll put this link in the show notes as well. Sorry. Here we go. So there's the link for that. Okay, let's come out to the platform now and do a little bit of trade management. And I want to start with eBay. So eBay, we did 2 trades. Okay, on eBay. So we did the long call, and let me just zone in here. So we did a long call. We put both trades on the same day, and it came up and hit our target. Then we have this one ATR target. And so I like to make this a semi-democratic class. When I looked at this earlier today, this was, a red kind of, I don't want to call it, it's like a spinning top only with really long wicks, which indicates that this uptrend might be over. So here's our stock swing target. We still have a stock position. And so my question is, do we hang in there for the stock swing target, or do we take the money and run? we ended up out with about a 30% gain or $156 gain on the long call. And we are up on eBay on the stock, the 75 shares that we bought to have a $5,000-ish position. We're up about $165. Now, we were down when I first looked at it. So do we take the money and run, or do we hang with it? And there's no right or wrong answer, but I will go with whatever I see as the majority. And you know what? I'll do a little survey here and you guys can respond. So I'm going to start a poll, and it's eBay, take the money and run. Question mark. And then it's either a yes or no. We'll go on to people are saying exit. Okay, so there's my poll. We'll give that a minute or two. Now we're going to come and look at 3M. So 3M, this is one where your petunias could potentially be frosted, and where we could end up, snatching defeat from the jaws of victory. So we placed this trade. We had a 1 ATR target. Our target was, catch this, 155.07. And where did it come up to? 155. And then it has started pulling back. So it's pulled back about 80 cents. So I'm going to make an executive decision here and say, hey, it came to within 7 cents of our target. We now have this maybe dark cloud cover type pattern setting up. And by the way, I posted something on X this week, a cheat sheet for candlesticks. So you may want to go and check that out. But we are going to, come to the monitor tab, come down to our long call. We are up 75% on that, my friends. And we've given $40 of it back. So I am going to come up to working orders. I am going to organize these by symbol. I'm going to come down to 3M, and I am going to cancel that order because it had a conditional component to it. And then I'm going to come back down to 3M, and we are going to create a closing order to sell it at the current price. Okay, the cheat sheet for candlesticks, Valeria, I posted on X. Okay, so you have to go to X, Barb Armstrong CS, and it was posted this week. I can repost it to put it at the top of the feed after the class to make it easy for you. So there's 3M. Okay, so far we're 78% take the money and run. So we're going to go back to eBay, and we are going to take the money and run. So eBay was our stock. So another way to exit this is we're just going to come here to cancel, because we had both our target and our stop, and say cancel this whole OCO group. And so I put in a request to cancel that. And now you'll see that little chiclet with the sell orders gone. So now we're going to come and, because what the market giveth, the market can taketh away, right? So now could we place a new order on this if it continues to go up? Sure. So we just want to sell at the current price. Confirm and send. And this is why it's important to monitor our positions, right? Right. Just not in agreement, right? Okay, so that is that one. Now, one of our guidelines when we place a long call vertical is to get out if we're up 50% or down 50%. We're going to look at these every day. So when we look at Marvel, we're down 60%. And you know what? We were down to almost zero. This was worth 8 cents a couple of days ago when we looked at it. And this is one of the stocks that got caught in the deep sea, AI thing, but it has come up remarkably. So I don't know why actually it's showing as down today when the stock is up 3.5%. there's some wonky stuff going on, and and it could be because volatility is dropping also, but because we're in excess of where we wanted to exit, we're going to keep looking at this, and we'll look at it again on Monday and Wednesday. And if it keeps going up, then, we'll let it do its thing, because we have 3 weeks until this expires. Okay. So that's Marvell. And then the last one I wanted to look at is Dollar Tree. And this one, I still don't understand, why the knickers are in a twist. Like, this is down. It went from being profitable yesterday, and volatility's dropping overall, which should be a plus. But let's just come and look at the charts. So this is up a little bit today. And I looked at, well, then could we close out this iron condor, like the short put vertical side leg out? But it's really still trading about the same price. So we're going to keep our eye on this. And this is what I affectionately refer to as our credit spread sandwich, where we did a long, sorry, this is a typo, a short call vertical here, and I'll correct that, and a short put vertical here. And as long as it stays in here somewhere, we're happy campers. And so far, it's kind of done exactly that. And so we're just going to, be patient. Okay. So that's where we are on this one. And I am going to, because I don't want to confuse anyone, this is a short call vertical. So the idea is that we think it's going to stay in this range that it has been in since, I think it was like the beginning of September. We come back here. Yeah, September 4th. Happy Labor Day. Yep. So no one shop at Dollar Tree. No, I'm kidding. It's a great place to buy, gift bags and cards. All right. So let's go and look at some new opportunities now. And one of the ones I wanted to look at today was Goog, or as I say in my head, Google. And Google went through this period of consolidation last year. It's one of the Mag 7 stocks. As somebody saying you're already confused, just hang with us, Art. And know, like, I run in this class and I move really quickly, and we place lots of different types of strategies. So if you're new to these, you may want to go back to the Getting Started with Options series and go through some of these trade strategies. I have also, this is my plug to subscribe to the channel. You'll want to come to the playlists. And if you come down to, and this is Trader Talks from Schwab Coaching, you've got a button in the bottom right that you can hit. If you come to these trade management mini sessions, when I talked about our example trading plans, and this is just a framework from which you can build your own plan, but I have one for long call verticals, and we've talked about a long call vertical. We're about to go and talk about a short put vertical. So we've done that. We had a trading plan, a long call with a 1 ATR on eBay target. And we're also going to talk about a buy right. So if you want to see these example trading plans, you can come here and look at those. And I know we have a lot of new people today. If you're new also to Thinkorswim, there's, all these great short videos on how to customize a watch list or charts or the monitor tab, all of that good stuff. Okay. And if you need a reminder, because Thinkorswim just had an update, and if everything got reset for you as it did for me, and you don't quite remember how to do something, you can go back to those short videos as a resource. But Google was kind of, it set up this kind of cup and handle pattern or an inverted head and shoulders, and then it broke out to the upside and kind of went sideways, for most of the month of December, which, given a lot of the market pulled back, is a testament to its strength. And we had done a 1 ATR trade on this month, which is now done, but it's now kind of broken out of this sideways range that it was in. And so could we sell if we believe that this old resistance might become new support? Could we sell a short put vertical at that 200 level? It's now trading around 204. If we believe it might stay above there. And if we came out to February, and if you go and look at that example trading plan, it's like, does this stock trade 1 million shares a day or more? Check. So that's the first place we look. Check. If we look at this 200, or maybe we could even sell the 195, do we have a lot of open interest? Check. In fact, we have hundreds of contracts traded just today. And then if we're looking at our probability of this trade working out or working against us, at the 200 level, it's saying you've got a 40% chance, 41% chance it could be in the money at expiration. At the 195, you've got a 31% chance of it being in the money at expiration. But this is the probability of it touching. So you've got an 82 to a 62% chance of it touching, which means don't panic. No need to don the Chicken Little garb and start running around in a panic, right? Now, the other question we might ask ourselves is, if we look at this, say the 195 strike, are we getting enough premium for it to be worth our while? And so if we have this 250 wide spread, and let's bring up a calculator. So if I take 250 minus 70, that gives me $1.80, right? So feel free to check my math. So if I take that 70 and divide it by 250, 70 divided by $1.80, divided by $1.80, my return on risk is potentially 39% for a trade we'd be in for 21 days. And our rule of thumb is, if we're in it for 21 days, we want to get at least a 21% return on our risk. In fact, we typically will pass on something if we're not getting at least 25. Now, if we did the 200, we get a higher premium, but we have a higher probability of the trade not working out in our favor, don't we? So if we say, hey, if we have a 38% potential return, how many of these could we do? Well, if we did 3, we'd be risking over 500. So if I come to confirm and send, we'd be risking $540. So if we're okay with that, we could do 3. If we're saying, no, there's not a chance we're going to go over 500 in risk, then we do 2 and we'd be risking, just under 400. So, if we said we're okay with that, we could make $210. That's the most we can make. We're going to put in a target exit, and our target exit is going to be at 80% of our max gain. And when we've got 80% of our max gain, we'd like to take our risk off the table. So we're going to say, hey, when this is worth about 14 cents, we'd like to buy it back to take our risk off the table. Now, if we get to the point where we've got 75% of our max gain and it looks like Google might start pulling back, could we exit the position just like we did on the trade that got within 7 cents of our target today? Absolutely. So we're going to put that in our short put vertical bucket. And, technically it's called a group. And, if you don't know how to set, Google has earnings next week. Oh, I didn't see that. Oh, dang it. You're right. So with this one, what we might do is go in and say, oh, didn't notice that, because one of our guidelines is that we don't trade this over earnings. And, I've had people say, what went wrong? And it's like, well, what went wrong was when you placed the trade. Because we placed the trade And between the, and some people will do this as an earnings trade. Okay. So you guys, yep, you caught me on that one. So we're going to go in and say, okay, filled. Google hasn't filled yet. So I'm going to come down to Goog, and we're just going to cancel that whole thing. So thank you for paying attention. Okay, let's go look at American Express. Now, American Express just came with earnings earlier this week. And what sector is it part of? The financial sector. What sector has been crushing it? Financial sector. And when we look at this chart, we had earnings here, and you'd say, well, okay, we had earnings on this day and then it pulled back. So what's with that? Well, let's go look and see what the analysts are saying. So this morning, Wells Fargo moved the price target to 370. It's currently sitting at 318. Okay, so they raised the price target. How about here? Citigroup raises price target to 320. RBC raises price target to 350. Citigroup to 320. Redburn seems to be which one is not like the other. It raised the price target, but to 270. I don't know if they're watching the current price. Evercore raised the price target to 344. So, these guys can't all be right. And in fact, they could all be wrong. But the sentiment seems to be from the analysts who make a living by analyzing stocks like this, that they're pretty bullish. So could we come down here and sell something below this recent low in this candle, and you might, like somebody who was really aggressive might say, I'm not going to count the wicks because it may have dipped down there during the day. I'd be comfortable selling the 315. If you want to be more conservative, you might say, yeah, if I can get enough premium at the 310, maybe I do that one instead. And we are on the other side of earnings for that. Does it trade more than 1 million shares a day? Yes. We're early in the day yet. If we look at this 310, do we have a tight bid-ask spread? Is it less than 10%? It's less than 30 cents. It's about 20. So we're good there. Do we have 20 times the number of contracts we want to trade? Yes. Probability of it being in the money, saying 29, call it 30%. So we have a 70% chance of it expiring worthless. And that's not like, this is just based on a mathematical algorithm, this probability based on where the stock is currently trading in relation to this price. We also are layering on our technical analysis savvy, so to speak. So if we get a 59-cent credit, what are we risking? We're risking $1.91. So if I take 59 and divide it by $1.91, that's the 250 minus the 59. That's a 31% return for a trade, potentially for a trade we might be in for up to 21 days. So if we're okay with that, and again, we're risking how much? About 200 a trade. So we could do 2 of these. And so we're going to first trigger sequence, right click, opposite order, and we're going to make this 12 cents. I've just taken that 59 rounded to 60 and multiplied by 0.2. So I could do the math in my head. Okay. So how much can we make? $118. And so some people might be saying like, hey, some people might be saying like, hey, that's not going to have me drinking something out of a coconut in Maui. But, $118, it may not pay for the flights, but, it'll buy some groceries, or it might buy you that drink in Maui. If you're looking for a way to generate income, not that I'm suggesting how you spend your, virtual money. You could go out and have a virtual drink with it. Or you could pay a virtual bill, so we're going to call this put this in our short, put vertical group, fire in the hole. So somebody's saying, I don't understand how you decide between a put credit spread or a debit spread? And, this is a good question, and you're not the only one to answer it. So on Monday, we might add a long call vertical to this, but today it's pulling back. And so we want to take advantage of the fact that it's pulling back. It's still, an uptrending stock and get a little richer premium, but we might prefer to wait until Monday to get confirmation that it is moving up and not starting to move in a sideways range like it did here. Because a long call vertical is a little more directional. So if we want to put this on our chart, could say short put vertical, 310, and then 307.50 are our strikes, and it expires February 21st. Bada bing, bada boom. So that's now on our chart. So, you might say, well, I see it below this support level, below the low of this. And, you might think that this previous high would act as a support level as well. So we're trying to line things up so that this is more in our favor, right? Okay. So that was American Express. Let's look at Microsoft. So this is another, one of the heavy hitters on the NASDAQ and the Dow. What do I mean by that? Well, on the NASDAQ and the S&P. So if we come to Market Watch and we come to visualize, we can see Microsoft, even as part of the S&P 500, it's bigger than the whole utilities sector. It's bigger than the whole real estate sector. And it's bigger than the whole energy sector. It's also bigger than the whole consumer staples sector. Do you see what I mean? So it's a heavy hitter on this index. It's also a heavy hitter, and this is the tech sector, this whole section here. So the tech sector is a very heavy hitter on this NASDAQ, and Microsoft is a heavy hitter within it. Okay. But if we come to the charts, it just had earnings. I was watching some people in the, financial space talking about this, and, it had a really negative reaction on earnings, even though, it was so weird because it beat on earnings. And, it had a really decent earnings report, but it just kind of like sometimes with Apple, it'll have an earnings report and then still the pundits will, it'll take a beating in the market, even though the results were extraordinary. So you have HBZ adjusting your price target to 598. It's sitting at 418. Even though UBS maintains it as a buy, they lowered their price target to 510. That's almost $100 above where it's currently trading. So if we look at this, it's more bullish than bearish, right? And so if you just hover over this, you can see the actual was 323 a share on earnings per share when the street was expecting 311. So it's kind of bounced. So, and it's been trading in this big fat upwards range. Could we sell this 410 and get enough premium? It's sitting $8 above that. So I'd say it's kind of sort of bullish in that if we sell the 410 as a short put vertical, and then because we can't afford to be assigned a $41,000 position if we were assigned 100 shares, could we get enough premium for that to be worth our while? And again, a more aggressive person might come up here and say, I'd be willing to sell the 415. Well, you can sell whatever you want. So we're going to look at this 410. And I say it's kind of sort of bullish because as long as it stays above 410, then we'd be okay. Does it trade 1 million shares a day or more? Check. Do we have lots of open interest? Thousands of contracts, almost 8,000 contracts at the 410 strike, 579 traded today, a 34% probability currently. And these are, numbers that will change throughout the day. If it goes up dramatically on Monday, we'd see this number change. And we've got a 10-cent bid-ask spread. So is that less than 47? Yes. So we're looking to sell this vertical 410, 407.50. Now, I know some of you are probably saying, why aren't you doing a $5 wide spread? Well, if I get 75 cents, and we know just rule of thumb, that's, 75 divided by what? 250 minus 75, $1.75. That's got to be close to a 50% return. 75 divided by $1.75. Oops. This thing is my nemesis. That's a 43% return on our risk. Now, so why not make it $5 wide? Well, if I go to 405, if I'm taking double the risk, do I get double the credit? Oh, sorry, 405. I get $1.40. Actually, that's only 10 cents off. So that's not bad. And what's the advantage is that, my probability of it going through both strikes goes from 30% to 26%. So, the odds of taking a max loss goes a little, it goes a little bit in our favor. But often the difference, because there's a $10 difference, right? Well, now it's $1.37. So there's a $13 difference. If I buy two contracts instead of one, it costs me $1.30 more to get in and $1.30 more to get out for two contracts versus one. So I'd still net be ahead of the game in doing, given it stays above 410, in doing the narrower strike. And so I brought that up for that reason. So we're going to do two contracts. Two contracts, single order, first trigger sequence. And we're going to create an opposite order and say, hey, when this is worth about 15 cents, we'd like to buy it back. Sometimes it's a pretty dramatic difference. Today, not quite so much. Depends on the stock. Confirm and send. And again, we're selling two verticals, and a short put vertical is less directional. It just has to stay above 410. So in that way, it's a little more forgiving, but we're risking more and ultimately making less than we typically aim to make when we do a long call vertical. Now, is this to say we couldn't do a long call vertical as well? Especially if it gets back up into this range. If it manages to heave its way over this line, because what is one of the considerations is that an old support level can become a new resistance level. And so we'd like a degree of confidence that it's going to get back up over this line, perhaps before we do a long call vertical. Now, the other thing is, let's say it gets up here, could we turn this into an iron condor? Let's say it had, 3 or 4 really big up days and then looks like it's going to come back down again. And the answer is we could leg into an iron condor. Yeah. So that's a possibility as well, right? Okay, so that's Microsoft. I want to look at one other one that I looked at and I thought, well, this looks like it's got potential. And this is Paramount. And let's look at a 1-year chart. So this has been on the struggle bus, right? And then it's been trading in this range. But two things that I noticed that I thought, oh, could this be a candidate for an iron condor? Well, one, this is a $10 stock. And so, $10 stocks, a dollar wide move represents, a 10% move in the whole value of the stock. So that's kind of one strike against it. And then we have earnings coming up, on the 26th. So for that reason, even though it's been trading in this range, since last August, decided to pass on that one. Okay. So somebody's saying, so you want Microsoft to stay above 410, correct? And we want it to stay above 310 on American Express. Let's come and look at our trades. So with American Express, we sold the 310, so we want it to stay above 310. You are correct. And then the Microsoft trade that we just put in, it has not yet filled. So we're going to just give it a minute. And could we come and say we'd be willing to take a little less? But it's saying that, the mark is 75, but I'll make sure this fills. And if we have to take 70 cents, well, we'll take 70 cents instead. But yes, the goal is for it to stay above 410. Now, another one that you may want to watch is Internet of Things. And this is a stock that we've traded in the past, partly, because it's an interesting company, and partly because it's in our snap bracket being around $50. And so, this has earnings coming up, but not until March. And it tends to have a higher degree of volatility than some other stocks. Like if you look at, say, a Coca-Cola, that's half the volatility of this IoT. But could we come out and sell the 55 call? And, it's trading at 52. So we make 250. Well, it's 52.50. We'd make 250 on if we got called out, and we get to keep this $1.10 to $1.20. We're going to come back and look at this again. Oh, there, our Microsoft got filled on Monday, because if it keeps going up, what will happen? Well, we'll have to pay more for the stock, but we'll get more for the option as well. Or we could just say, hey, you know what? What is the probability of this going up to 55? Like right now it's saying 60% chance, 63% chance of it touching it, but only a 31% chance of it staying there. And, it meets our other requirements. We've got at that 55 strike, 1,200 contracts. We get paid $1.10 to $1.20. And we now have $11,000 sitting in the account. So if we said, okay, we would like to do, it's called buying covered stock. And so 51.34, what's the most we could make is $3.66 on a $51.34 investment, because the most we can make if we're called out is $55, even if it goes up to 60. But that's a 7% return in 3 weeks. Not so bad. Somebody's saying, you know what, this sector, hasn't been, this is in the tech sector, and the tech sector's been, it's like, I love you, I hate you. Remember the daisy? She loves me not. But the tech sector has, it's not to be trifled with. It got hammered on Monday of this week, but it's making a pretty decent comeback. And so some might say, like, yeah, I'm not interested in that. And that's okay. But if you want to try and manage your risk on it, you come to IoT and say, well, if we think that this is going to hold as a support level around this 5106, so I'm going to take that 51 times 0.97. I'm going to put a stop at 49.47. So just down here. Get rid of that. So, and to do that, we're going to come to first trigger sequence. We're going to create an opposite order. And if our stop is at 49.47, how much are we risking? Now, there's no guarantee that we get out at exactly that price, but we're only risking about $200. So 49.47 is our stop. Good till cancel, confirm and send. There's our buy right covered call. And the goal is to be called out. Yeah. Somebody's saying, I love. I didn't put it in as a stop. Okay, I'll go in and put that in again. But we need to wrap now. So what did we end up doing today? We did some trade management. We took the money and ran in a couple of places. We did a buy right covered call on Internet of Things. We, because I didn't put in the correct price. Hello. We did a short put vertical on Microsoft and an example trade on American Express. And then we exited our eBay and our Triple M positions, both of those for an example profit. Somebody's saying, why not just do a long call? You've got all kinds of choices. And so part of the beauty of this class is that we like to demonstrate different types of strategies. So guys, that's a wrap for today. Thank you for joining me. Get out and hug someone you love this weekend. Thanks to the tech team behind the scenes and for Mike Fairborn answering your many, many questions. Thanks for playing along. Hit the like button. It helps move things up in the algorithm so more people can find this. Oh, I'm sorry, it's Connie in the chat today. So thanks to Connie for answering all those questions. Follow us in the land of X, Barb Armstrong CS and Connie Hill CS, and we'll see you in a webcast coming up soon. Take care, everyone. Bye for now.